as I may consume.
Gentleman's recognized.
Mr. Speaker, I am very pleased to rise today in support of H.R. 2954, the Home Mortgage Disclosure Adjustment Act. H.R. 2954, which was introduced by Mr. Emmer of Minnesota, a very hardworking member of the Financial Services Committee. It's a very important piece of legislation that will provide much-needed regulatory relief for our community banks and credit unions from onerous CFPB regulations that are impeding their ability to make home loans to our constituents. On January 1st of this year, draconian changes went into effect related to the Home Mortgage Disclosure Act known as HMDA. These changes, which were mandated by Dodd-Frank and blindly implemented by the CFPB, radically expanded the information that lenders are required to collect, record, and report about mortgage applications and loans. But many things the CFPB is involved in, the rule went far, far beyond what was originally intended by Congress, and effects have far-reaching and negative consequences on community financial institutions and homebuyers. To be more specific, the CFPB's updated HMDA rule now requires financial institutions to collect 48 unique different data fields on each mortgage loan they make. This is more than double the number, Mr. Speaker, the number of data fields lenders were required to collect before the rule went into effect. Now, as if adding 2 dozen more data fields wasn't enough, the CFPB rule also modified 20 of the 23 existing fields in this constant changing of the regulatory scheme to fit the narrative of regulators rather than focus on the cost and benefits to our constituents of existing statutes. Mr. Speaker, the House is not in order.
Gentleman suspend. Members, we've asked for order in the chamber. Please take your conversations off the floor so the gentleman can be heard. We'll wait until we do. Gentleman, continue, please.
Thank you, Mr. Speaker. Again, the constant changing of this regulatory scheme, the increased complexity and cost, does not we do not fully appreciate the impact on our community financial institutions, and we do not fully appreciate how this is impeding the success and growth of our community financial institutions and the communities we represent. And you don't have to take my word for it, Mr. Speaker. A community banker in Kansas said that, quote, "As crazy as it seems, our current HMDA process includes 4 people verifying HMDA data on each loan." And, Mr. Speaker, that was before the changes we are discussing today. According to that same community banker who's trying to fund homes in his local community, doubling the number of as required in the CFPB's HMDA rule, quote, "will almost be overwhelming for a bank such as ours." As a community banker from Nebraska has stated, quote, "all the new mortgage lending rules have made it almost impossible to provide timely service to our local customers," unquote. And so home buyers are feeling this effect, Mr. Speaker. As one community banker from Ohio explained, he was working with a woman who has recently went through the tragedy of divorce. She was trying to refinance her home in order to make ends meet. But after filing mountains and mountains of paperwork and wading through all the different forms, she looked up at the banker and said, quote, "Jim, just tell me it will be okay." As Jim put it, quote, "at that point I realized just how overwhelming all the forms and disclosures were to a customer. Sadly, we all have. The lawmakers, the regulators, and the bankers have forgotten the most important item in this entire process, the customer." And this community banker is right, Mr. Speaker. Our local financial institutions, our community banks, our smallest financial institutions especially, they have to spend less time and resources meeting Washington's complex, burdensome, onerous paperwork requirements, and instead we need to give them more freedom to do what they do best, and that is help people in their communities get into homes they can actually afford to keep. But doubling Doubling HMDA data requirements needlessly makes home buying more expensive, more confusing, and more difficult for the very people that we should be trying to help. You know, home buyers like April from Kentucky wrote that the process to get a home, quote, is almost impossible and, quote, extremely frustrating. Or a home buyer from the name of Rob who explained, quote, the very people this was supposed to be helpful to, lower income working Americans, have been the parties most devastated by the overreach. And that's exactly what this is, Mr. Speaker, overreach. And it's not only these individuals, but even charities, great charities like Habitat for Humanity, who said, quote, thanks to the CFPB's burdensome regulations and rules, charities such as Habitat that provide these loans have found it more difficult to do their important work. H.R. 2954, the gentleman from Minnesota, simply addresses the fact that in order to make home loans, small financial institutions should not and cannot afford to keep pace with the massive laws that disregard their businesses, their business models, and create an uneven playing field. For this reason, and for the others I've stated, Mr. Speaker, I urge all colleagues to help struggling would-be homebuyers in our districts and support H.R. 2954, and I reserve the balance of my time.
The gentleman reserves. The gentlelady from California.